These are 7 top big cap stocks with large percentage gains today. While watching bullish price actions, let us inform you. Our review on LXRX. Lexicon Pharmaceuticals Incorporated has made some big waves recently, and if you're watching the biotech space, this could be a game changer for the company. They just entered into an exclusive licensing agreement with Novo Nordisk for LX9851, a first-in-class drug candidate designed to tackle obesity and other metabolic disorders. For Lexicon, this is a massive deal. Not only does it give them a partnership with a powerhouse like Novo Nordisk, but it also positions them to potentially reap up to $1 billion in milestone payments over time. Plus, they're set to get tiered royalties on sales, so the financial upside could be huge if everything goes as planned. So, what exactly is LX9851, and why is it so important? It's an oral, non-incretin drug that targets an enzyme called ACSL5, which plays a key role in how fat is stored in the body. That's a big deal, considering the massive market for weight management solutions. What's even more interesting is that early preclinical data shows LX9851 could work really well in combination with Novo Nordisk's semaglutide. Yes, the same drug that's been making headlines in the weight loss space. In fact, when combined, LX9851 and semaglutide significantly reduced weight, food intake, and fat mass in animal studies. So, there's a lot of excitement here about what this could mean for the future of obesity treatments. But it's not just the science that's driving this partnership. It's also about the financial potential. Novo Nordisk is now in charge of all the development, manufacturing, and commercialization of LX9851 worldwide, while Lexicon will handle some of the early-stage work to enable the IND filing. For Lexicon, the deal comes with an upfront payment of up to $75 million and the possibility of hitting various milestones along the way, bringing in some serious cash. And if things really take off, those royalties could add up in a big way. This is already showing up in Lexicon's stock price, which surged by 64% on the news. Investors are clearly excited about the prospect of this deal. And it's not just this one drug that's creating buzz. Lexicon's pipeline is full of potential, with other promising candidates like sotagliflozin in trials for heart failure and diabetes, and LX9211 targeting neuropathic pain. The fact that they've secured such a major partnership for LX9851 only adds credibility to their whole pipeline. For those following Lexicon, it's clear that this is a major step forward. The agreement with Novo Nordisk isn't just a financial win. It's a validation of their science and a signal that they're onto something big in the world of metabolic diseases. If Lexicon can continue to deliver on its pipeline, keep securing partnerships, and stay on track with its clinical trials, there's a lot to look forward to. This partnership could be the first of many, and investors should definitely keep an eye on how it unfolds in the coming months. Our review on DBVT. DBV Technologies SA, a French biotech company, has been on investors' radar lately, and it's easy to see why. The company specializes in treating severe food allergies, with its Vascon technology using epicutaneous immunotherapy, EPIT, to deliver treatments through the skin. This approach is huge for kids with allergies like peanut, milk, and egg, as it's a safer way to avoid life-threatening reactions while still getting the necessary treatment. So, what's got DBV stock soaring 58% today? It's the news that the company has secured up to $306.9 million in financing to push its Bioskin peanut patch through the FDA approval process. This patch, aimed at children aged 4 to 7, could be a breakthrough for peanut allergies if it gets approved. The deal brings in $125.5 million upfront, with up to $181.4 million more available if all warrants are exercised. This hefty financing package should give DBV the funds it needs to submit its Biologics License Application, BLA, to the FDA and get the patch to market, if it gets the green light, of course. The market is reacting strongly to this news, and it's clear why. The Viaskin peanut patch has the potential to be a major treatment option in the growing field of allergy therapeutics. With DBV aligning well with the FDA on safety data, there's a sense that the company is positioning itself for an expedited approval process, making the financing deal even more exciting for investors. However, there's a catch that investors should keep in mind. This deal could lead to up to 73.7% dilution for existing shareholders, which is pretty significant. But despite that, the stock is up a massive 58% today, reflecting strong investor confidence in the potential of this treatment. DBV is also seeing positive momentum in its Phase 3 VITESSE study, which is exceeding enrollment expectations and could bring key results by the end of 2025. All in all, DBV is positioning itself for a potential breakthrough in food allergy treatments. And today's stock jump shows just how much investors are banking on it. With solid financing now in place, they've got the runway to push this innovative treatment forward. But of course, the real test will be whether the FDA gives the Viaskin peanut patch the approval it needs to launch in the US. Stay tuned. This could be just the beginning of something big. Our review on NTHI. NeOnc Technologies Holdings Incorporated is a clinical stage biotech focused on developing treatments for aggressive brain cancers. The company's lead products, NeO100 and NeO212, are designed to improve drug delivery methods for brain cancer patients, with NeO100 using intranasal delivery of parallel acid and NeO212 combining temozolomide with parallel alcohol for brain metastases. Today, NeOnc made waves with the announcement of a strategic partnership with CBCC Global Research, a clinical research organization. This collaboration will help expand NeOnc's clinical trial network in India, pushing forward the development of its brain cancer treatments. The market reacted positively, sending NeOnc's stock up 37% today. This partnership is a major step for NeOnc, expanding its global reach and accelerating clinical trials for its treatments. With such a strong push forward, NeOnc's future looks promising, and today's jump in stock price reflects investor confidence in its potential to make strides in brain cancer treatment. Our review on ALMS. Alumis Inc. is a clinical stage biopharmaceutical company focused on developing TYK2 inhibitors to treat immune-mediated diseases. Its lead candidates, ESK-001 and A005, aim to address conditions like psoriasis, lupus, and various neuroinflammatory diseases. ESK-001 is a second-generation TYK2 inhibitor targeting diseases like plaque psoriasis and systemic lupus, while A005 is designed to penetrate the central nervous system to treat neuroinflammatory disorders. Today, Alumis is seeing a surge in stock price, up 20%, following some strong updates and strategic moves. The company has made significant progress with its clinical trials, particularly with ESK-001, and it recently announced a merger with Acelerin, which will help strengthen its financial position and late-stage pipeline. With a solid cash runway, the merger will boost Alumis' ability to continue advancing its therapies and bringing them closer to market. What's more, Alumis' recent partnership with Lexicon Pharmaceuticals for ESK-001 in Japan is a huge win. This deal includes $40 million in upfront payments and up to $140 million in milestones, which significantly extends the company's financial runway. Analysts are optimistic about the future, with bullish ratings and strong projections for the stock's growth potential. With major clinical milestones and upcoming data readouts expected in the next year or so, Alumis is positioning itself for long-term growth, and investors seem to be taking notice. The combination of a solid financial position and promising clinical programs has investors feeling confident, and today's stock jump reflects that optimism. Our review on AGX. Argan Incorporated is a construction services company that operates through its subsidiaries, offering a broad range of services to the power and industrial sectors. They focus on delivering engineering, procurement, construction, and maintenance services, especially in the power generation and renewable energy markets. With a diverse portfolio, Argan plays a crucial role in both traditional and renewable energy infrastructure. Today, Argan stock is up nearly 20%, thanks to some impressive financial results. For fiscal year 2025, the company reported a 52% increase in revenue, bringing in $874 million. Their Q4 performance showed solid growth too, with a 41% revenue bump and a net income that more than doubled. This growth comes from their power industry services segment, which saw a massive 66% increase in revenue for the year. The demand for energy infrastructure, especially for natural gas and renewables, continues to fuel Argan's strong position in the market. In addition to the solid revenue numbers, Argan's project backlog jumped 80%, reaching $1.4 billion, which signals strong future growth. The company's gross margin also rose to 20.5%, reflecting better operational efficiency. With $525 million in cash and no debt, they're in a strong financial position, which is key to pursuing future opportunities and overcoming any supply chain challenges they may face, like issues with long lead items. Argan's optimistic outlook, supported by a solid pipeline and increased dividends, adds to the good vibes. Despite a dip in industrial construction revenue due to timing issues and some supply chain hiccups, the company is well positioned to capitalize on the ongoing demand for energy infrastructure. Investors are clearly feeling confident, as reflected in today's stock jump. With growth prospects looking strong, Argan is in a good spot for the foreseeable future. Our review on LWLG. Lightwave Logic Incorporated is making waves in the world of electro-optic devices. Their P2IC technology platform is focused on using organic polymers to convert electrical signals into optical ones. This tech is crucial for applications in high-speed data transfer and telecommunications. The company's first major product, the Ridge waveguide modulator, is designed to demonstrate how their electro-optic polymer system works, with the goal of showing how reliable and easy to manufacture their devices are, especially in partnership with the silicon photonics ecosystem. So here's the big news today. Lightwave announced the controlled availability of its silicon photonic process design kit, PDK. Why does this matter? Well, this kit is a key step in integrating their advanced electro-optic polymers into silicon photonic integrated circuits. It's a technical milestone, as it enables Lightwave's polymers to work seamlessly within the existing silicon photonics infrastructure, a critical development for industries relying on high-speed data transfer, like telecom and data centers. This announcement has investors buzzing, with the stock jumping up 18% today. And you can see why. It's a clear sign that Lightwave is getting closer to scaling its technology and commercializing it in the broader semiconductor market. If they can execute on this, they'll be positioning themselves as a major player in the photonic space, and that's exactly why the stock's seen a big spike today. The future looks promising for Lightwave, and it seems like investors are starting to take notice. Our review on GHLD. Guild Holdings, a company in the residential mortgage space, focuses on both originating and servicing loans across the U.S. They handle everything from loan origination to managing payments, taxes, and other servicing tasks, all through their in-house platform. Recently, the stock saw some movement after Bank of America lowered its price target from $15.50 to $13, maintaining an underperform rating. This reflects broader concerns about high interest rates and tough competition in the mortgage market, which are expected to squeeze margins. They also lowered their 2025 earnings estimate. Despite the downgrade, Guild stock jumped 16% today. It's a bit of a mixed reaction. While analysts are cautious about the sector, investors might see this as an opportunity, especially with the stock now trading lower than before. While the road ahead is uncertain, Guild's ability to manage its servicing portfolio could still drive some surprises in the near future. Please subscribe, give the video a like, and watch more from our playlist. Thanks.